Hi, this is Mark with your analysis for the week commencing 25th of September. Very interesting times we have at the moment. This is the Euro USD on a weekly chart, and you can see we are in a clear downtrend here. So I have fibbed from the low to the recent high, which goes back to December of last year. And where are we? And I've been saying for the last few weeks, this was the major area. 3500, 1.3500 is the area on this pair. It is the 50% fib retracement of this recent weekly move, and we have the weekly 200 EMA there. I did caution about not shorting here on Thursday, Friday, because this Bollinger Band has opened. So what have we got? We've got stochastics pointing up, we've got 5/8 cross, everything is now pointing up. If you were trading this on a weekly, however, you would be looking for reasons to short. Right, the way I will play this is this. This is on a daily chart. Price is clearly on a daily chart. We had a break of a major area of previous support and resistance, which also just happens to be the weekly 55 EMA, which we just looked at. So, the way I will play this is I am looking at this moment in time to long. And the best place for me to long is this area here, because if we were to get a pullback, then that will be the place. And if you look on the 4 hour, I put here on the 4 hour, that's the weekly 55. 13300 was a major area of support and resistance, and the whole level, whole number level as well, psychological level. So a pullback to here would get me very interested, because what we may find this week is price bouncing between these new areas. Prior to this, price down here went, if you notice, went sideways, bounced up, bounced down, had a breakout, settled down again, and we're now up here. So I would not be looking to short anymore. Those of you counter trend traders, that would be the area to consider, but personally I am only interested to go long. This is the pound on the weekly. Pound on the weekly, similar pattern, but is now coming up to 61.8 fib. It got within about 15 pips of it on Friday, and again, if you were trading off a weekly, you would be waiting now to look for something to short. But obviously, we're trying to make trades during the week, so what do we look for? Well, we had a clear break on Friday on this daily chart of the 157.20 area, which has been a major area of resistance and previously support and resistance. So, standard method is we are in an uptrend here on the daily. We will look for a pullback with a view to go long. And we now go to the 4 hour chart, and this is what I have on here. I have fibbed the recent high to the recent low, and I have this area here of 57.20. Now it may only get back to 58. I will be less likely to take it then, because this has been struggled at 59 prior, and then the 160 above. I really would prefer the euro, I think, tomorrow. This is gold. Now I was showing you last week, I said it was unlikely to me that at the first chance gold would break above 130, and it actually got within half a pip on Friday and bounced back down. I don't trade it. I have no interest in trading it. It's scary as this. But I use it because of the Aussie dollar, and the Aussie dollar and gold are closely correlated, as I explained recently, and this is the Aussie dollar. And you can see 4 times last week price slammed into and stopped and bounced off this upper trend line that goes back to the beginning of June. Now, what you could take a lead from with this is if gold was to break through 1300 tomorrow, then you would start to think in terms of the Aussie dollar following. And for the Aussie dollar then, the way I would look at this, I was looking last week for a pullback to 94, but you see now we then had another area of support here, which is 94.69, 94.60 area. And what we were looking for here then is a pullback to here with a view to go long. Your initial target, or longer term target here, would be this area. If, on the other hand, price continues, then you would look for a break and close above this trend line, and then with a view to a pullback to go long. This is the euro pound on a weekly, and again, similar scenario to the euro and the pound. We are now coming up to the 50% fib, 86.00, just above this weekly 55 EMA. This is a weekly chart, and this Bollinger Band. So lots of things here to look for clues around 8600 for a short tomorrow. However, if this opens upwards, this Bollinger Band, then I would be very wary. We're riding the 5, stochastics are pointing up. It does look bullish at the moment, but this is the crucial area for me. Dollar CAD. Dollar CAD has been going up and down like a yo-yo again. It broke below 1.0300 again, and this was like last week. We looked at this and we said we'll look for a break and a close, pull back on the next candle, and away you go. It doesn't work all the time, and the CAD is one of my least favorite pairs, but it's also following this trend line down that we have. So pull back to 130, 1.0300 tomorrow would have me very interested, and I would place my stop above this trend line, possibly all the way up here. Having said that, your recent low is 120 pips away, and we then get down into the realms of 200. I mean, the market is expecting this to go back down to 1 for 1. It's just a matter of when to catch it. But 1.0300, very interesting. Euro Aussie dollar, I said last week we were looking for a possible pullback. This is the daily chart up to here, 1.41 area. It's 61.8 fib, and we have a trend line in place as well, but it is starting to look bullish as this guy, so I would be wary. The important area that we broke back above was this. We are in a downtrend, but that would be 141, 141.40. There is lots going on there, so that is an area as well as being previous support and resistance. Swissy, I'm not touching it. It's at an extreme. It did work on Friday, the breakout and the pullback, but it's just too low for me, and there is a danger the Bank of Switzerland will intervene on this, which could suddenly see this go to the way very quickly, as was happened with the yen last week. And I cautioned with the yen the week before about not getting involved because of the Bank of Japan, and they did it again on Friday. On Friday I was looking for a pullback to 84.80, 8,500. Thankfully I missed this spike. This was a horrible spike. This was pre-London Open, and it was quite probably the Bank of Japan getting involved again. So the danger is, none of it. You can try to analyse this technically, but none of us know where the BOJ is going to intervene again. They do not want their currency to be this strong against the dollar, and therefore they are taking steps to change that. Now, those of you who like a flutter, the punters amongst you, if it gets down to here, and especially down to here, we'll be interested in trying to catch a major ride back up. But it is more akin with gambling than Forex trading. With trading, you are trying to assess from fundamentals and a combination of that and charts, previous patterns, why price would react where it should. Or when an external force comes into play, then all of that goes out the window. This is the Euro Yen finally. Euro Yen. Under normal circumstances, I would be interested to long this, but because of the situation I've just explained with the yen and the Bank of Japan, no. But it did break and close above 113.40, and this was a major area of support and resistance previously in the summer. Normally, I would be all over this to go long, but I would be very wary with this tomorrow, guys. Tomorrow as well, morning, pre-London Open, there is a speech by the Governor of the Bank of Japan, just to make things even more scary. I would leave the yen alone tomorrow, and I will be very wary with it this week. Have a great week.